From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's free video analysis for September 6, 2017. Today we're going to be taking a look at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. Starting here on the daily time frame, a couple of things to point out. Of course, long term, if I zoom out one time, we can see that this currency pair has been in a downtrend for quite some time, going all the way back into November, December of 2016. We've predominantly been bearish. There have been several times we would see a little bit of a rally, a push back higher again, in positive favor for the US dollar, and then a sell-off, and a rally and a sell-off. And we've seen that a number of times during the overall downtrend here for this currency pair. If I put a trend line on that trend, it's not really beneficial for us today. It's quite a ways above the current market, but we can see that overall it's been in a downtrend. Let's zoom it back in a little bit, and we can see in the past several months, we go all the way back to May, it's been largely contained within this black box. And even if I was to take that black box and pull it out a little bit and pull it like this, well, I'm trying to get it selected without selecting the horizontal line. There we go. If we pull it like this, we can see it's largely been contained, with the exception of 2 times challenging the purple zone at the very bottom of the chart, within that black box. And even today, we're at the bottom of that range, the bottom of that black box, and into the green shaded area. 95.50, 95.30 is that green zone. Again, there's only really been 2 instances where it broke through and challenged the purple shaded area. But again, going back to May, it's been contained inside of here. We can see the 2 black circles showing us several days, a couple of days, finding support here that broke through, and now over the past week or so, contained and constrained above 95.30, 95.50, the green shaded area. Let's go ahead and zoom it in one more time here on the daily time frame. And as we do that, we can begin to see really what's been happening. 1, 2, 3, 4, 5, 6, 7. Today, the 8th day challenging the green zone. Again, last week we saw one quick spike and a return back into the green zone. So this is clearly a significant point of support. We can see it in history. We can see it just in the past week or so. And only really if it gets through here on the underneath side of 95.30 do we expect it to go to the purple shaded area at the very bottom of the chart. So I don't think going short right now is our very best opportunity for the day today. Sure, the downtrend channel, the blue trend lines here show us a downward force to it, but we're right smack in the middle of that channel. The best place to go short, of course, for this currency pair would either be the top of the channel, the pink zone, up closer towards the 9600 level, or it finally breaks through that green zone, 95.30. So if you're looking to go short, you need to either go back up to the pink zone or break through the green zone. Until it does that, I think you run the risk, historically, of support here into this green zone and the possibility of it going back up. So sellers are being patient. Rally or break before you go short. Now on the other side, it's clearly been an opportunity for sometimes the buyers taking an opportunity to send this back towards the pink zone, top of our falling channel that we see here. Even if you go, regardless of the spike right here, even if you go back for the past 8 days, the past couple of times we touched here, it's been significant bounces off of that green shade area. So I think for the day today, the lowest risk and highest reward opportunity at the current moment is actually buying and looking for clues and evidence of support and reversal to go back up for the day today, not really going short. Your risk is too high to go short, and your potential profit is being capped right now at the green shaded area. Take it down to the 4-hour time frame. Not really going to change any of that, is it? But we can still see that significant support into the green shaded area. Again, it must penetrate, get through 95.30 before we would expect it to go down. But until it does that, support being seen here. And if you really take a look at this green shaded area in the past 1, 2, 3, 4, 5 4-hour candles. So we're looking at about 20 hours worth of time, just stagnant right around this green zone, 95.50, 95.30. The best opportunity here today, I believe, would be wait for a breakout, either above the green zone to go higher or below the green zone to go lower. One of those 2 things is going to give us confidence to take a trade, either back, targeting back to the pink zone, which we've already spoken about, or targeting back to the purple zone at the very bottom as our next targeted support lower. Now the Forex Black Book is red, so what we would be looking for there is a new sell or red signal for the Forex Black Book. We don't have one right now, and I don't think we're going to get one unless it takes a turn back to the pink zone. I think it would have to go back up to the pink zone, momentum shift to go back down before we get a new short signal for the Forex Black Book being red and a red sell signal. So we can't rely on that today. If we're going to go short, it's either back at the pink zone like it did here or under the green zone. One of those two things. So, but until then, again, possible intraday longs here. I would say wait for it to break out 95.50. Breakout meaning an open and close above 95.50. Sit down top of it as support again, and then you look for the rally towards the pink zone for the dollar franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.